Today, I want to talk about how the SEC is preparing for the squeeze by placing the first ever disclaimer on a film about the stock market. This is because the squeeze is still very much a real risk for them, and any slight change in numbers could trigger it. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, you may find this disclaimer weird, and you wouldn't be alone. The SEC has never insisted on a disclaimer before. They didn't insist for the Wolf of Wall Street to deter people from committing fraud. They didn't insist for the Big Short to deter people from taking leveraged bets against the housing market. They didn't insist for margin call, they didn't insist for too big to fail, and they didn't insist for anything else. But now, all of a sudden, the city regulator has taken aim at Hollywood's production of the GameStop saga in a bid to deter investors from losing out to stock market hysteria. It says cinemas have been asked to display banners warning of the risks of investment hype ahead of the screening of Dumb Money. And viewers will also be made to sit through a minute-long trailer-style warning. This is the first time the regulator, the FCA, has insisted. As I said, it's weird the SEC and the FCA are insisting now. They didn't insist for the Wolf of Wall Street or the Big Short or Margin Call or Too Big to Fail or any other investing film. They didn't insist on deterring people away from committing fraud, running Ponzi schemes, taking leveraged bets against the market or anything else. Just please don't invest in those meme stocks. As Matt tweeted, he said, "This is comical. It seems the shorts will go to any length they possibly can to deter people away from buying AMC and GameStop." Obviously, I'm not trying to insist you buy or sell any shares in the entire market. I can't do that as I'm not a registered financial advisor. I can simply bring you the news and bring you the facts or bring you new market updates or new rule updates. And the fact today is the FCA and the SEC are insisting on a disclaimer to warn you of meme stocks, something they've never done before in history. It seems any slight change in the numbers or the number of shareholders could trigger the AMC squeeze. That's why the shorts and the regulators are so desperate that more people don't invest into AMC or GameStop. And one of those things that could change the numbers is the new announcement of the Taylor Swift Eras Tour going worldwide. Adam Aaron added saying Taylor announced this morning that Eras Tour concert film will go global. AMC Theatres distribution is taking it to 100 plus companies starting October 13th. This is actually huge. This was already a big deal to be shown in theatres across the US, but now it's being taken global. That means a massive increase in the number of showings and an even bigger increase in the amount of revenue AMC will generate, as they'll be generating revenue directly, indirectly from other theatres, and also indirectly from concession sales too. And Practical Stocks has run the numbers and he's run some math. He said, let's have some fun. Around 7,500 cinemas are now expected to show the Eras Tour film. He said say showings are only Thursday to Sunday with 6 showings per day, totaling 180,000 showings per week and 720,000 per month. He said say the screen per theatre average is circa 150 seats and a 33% occupancy rate is achieved across the full run, which actually I think is very, very low. I think we could see occupancy over 60%, maybe even over 80%, as pretty much all the initial shows are all sold out. But he said even with that low occupancy rate, that's still circa 35.6 million bums in seats. With an average ticket price of $15, that's $534 million in revenue. With a 66% occupancy, that's $1 billion, and with 80 or 90%, that's $1.5 billion. You can currently get a guaranteed free share of Tesla or of Google and up to 15 free shares on top of that, each worth up to $2,000, which you could always use to buy more shares of AMC, GameStop or of any other stock. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying temporary deposit. Signing up to Moomoo is free and it's easy, it just requires that temporary deposit, but it's a really great way to help support my channel. And on top of that, Moomoo is very easy to use. They've got tons of technical indicators and advanced charting tools and their own options trading platform. Now add on additional concession revenue of $20 per head, which is an additional $700 million or $1.4 billion or $2.1 billion in revenue for AMC. On top of that, there's also additional exclusivity potential, such as exclusive merch sales, which again could generate millions. Under this logic, AMC could very easily double their entire annual revenue next year. Doubling revenue and keeping similar costs that step up in line would mean AMC generates billions of dollars in profits. And retail stocks added saying, "Tell me you're short without telling me." Mere hours after AMC announces it's about to have perhaps its most profitable film ever, Citi tries to tell us down is the new up. Again, it seems these shorts really are petrified, again lowering their price targets for AMC. This article says Citigroup maintains sell on AMC, lowering its price target to $4.75. That's down from $15 to $4.75 on news AMC is about to release its most profitable film ever. And not only that, but generate billions of dollars in new revenue. At this point, I think the shorts are really just embarrassing themselves, forcing the SEC to make a disclaimer on the new dumb money film and releasing lower price targets. We know their game, we know it won't work, and they're really just exposing themselves for all to see. And maybe the reason why these shorts are so scared is because of how much trouble Bank of America is in. And remember, Citadel takes its margin loans and its prime brokerage service from Bank of America. This article says BofA's unrealised loss on its held-to-maturity debt securities totals $106 billion, 34% of all such unrealised losses across the entire banking sector. It's not just 34% of the big banks' losses, it's 34% of all losses across the entire sector, including most at risk, those regional banks. But yet, seemingly, Bank of America is at even more risk than these regionals. It says according to Bank of America's federal regulatory fining for the quarter ended June 30th, 2023, it had $105 billion in unrealised losses. That figure is not only far beyond the realm of what peer banks reported, but it represents a stunning 34% of all unrealised losses on HTM securities in the market. With such a giant unrealised loss, as more of these unrealised losses become realised, Bank of America really is at risk of collapsing. And if they go under, they may end up dragging down Citadel alongside. Now you may ask, how would Citadel fall if Bank of America fell? And to which I'll direct your attention to the film The Big Short. You may remember there's the scene where Mark Baum is actually very worried about his hedge fund, or at least his employees are, because if Morgan Stanley fails, because they're under the umbrella of Morgan Stanley, Mark Baum's hedge fund would fail as well. He ends up holding on to the very last second before selling his credit default swaps and cashing out massively. But obviously if Morgan Stanley did fall, it would have taken down Mark Baum's hedge fund as well. So if Bank of America goes, Citadel is pretty much toast too. Now Dave Murphy has actually run the numbers on my video earlier of just how little of a fine Citadel received. He said in 2022, Citadel earned $16 billion, and it's just released that Citadel agreed to pay a $7 million fine. That fine amounts to 0.04% of their entire annual earnings. And to put that into perspective, Dave Murphy did some calculations as well. He said the average income in the US is $31,000. The average cost of a speeding fine in the US is $150. And that fine amounts to more than 0.48% of the average US income. So actually Citadel's fine is actually smaller comparatively than the average speeding ticket. 0.04% of Citadel's annual income as a fine is literally begging them to continue committing crimes. To show how absolutely ridiculous that fine is again, one individual podcast host received an $11 million fine. Yes, admittedly, he was running a Ponzi scheme, which is obviously illegal, but this one individual American who was a podcaster received an even bigger fine than Citadel did. Again, I don't want to understate the severity of running a Ponzi scheme or understate the severity of the crime of stealing money from people. It just really puts into perspective how pathetic this fine for Citadel is. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.